Welcome to the Mobile Home Park Mastery Podcast, where you will learn how to identify, evaluate, negotiate, perform due diligence on, finance, turn around, and operate mobile home parks. And now, here is your host, the fifth largest mobile home park owner in the United States, Frank Rolfe.
This is Frank Rolfe with Mobile Home Park Mastery. We're here for another exciting segment in our four-part installment on the insider secrets of mobile homes. I have with me Ryan Howerton from 21st Mortgage to talk about a program in the industry we call the cash program. Let me give you some background on this. It's the only program out there that effectively allows you to bring in a mobile home on a vacant lot. And through the good graces of 21st Mortgage, which is part of Clayton, which is part of Berkshire Hathaway, they will effectively finance the cost not only of the home, but the move and the set. I'll let Ryan give you more details on it. But what's terrific about the program is if you buy a mobile home park and it's got a lot of vacant lots, as we all know, the only way to tap the value of the vacant lots is to put a customer on them who's paying rent. That requires a home. So if you buy a park and it's got 10 vacant lots in it and you want to fill those lots, the capital required to fill those might be $30,000 or $40,000 times 10, $300,000 or $400,000. And that's a lot of capital to come out with out of pocket. Under this program, however, you're able to do the same thing to get customers in those lots, paying rent, tapping into the value of the lot, but without the money coming out of your pocket, instead coming out of the cash program. So, Ryan, are you here?
I'm here. Thank you, Frank.
All right, Ryan, well, tell people a little bit about the cash program. It's unique to the industry. It's a very powerful program. So just tell them the basic essentials of how it works or maybe some history of it.
Okay. The cash program stands for, a lot of people ask what cash means. It's Community Affordable Spec Home. When we started this program, it was all about providing capital, just capital to go out and purchase homes like Frank just described. And we'd let those homes be out there as spec homes because it does take a little while to sell it. And then what we did was we backed it up with a finance program for the customers that was really a good fit and made it affordable for the type of customer that's coming in. You see a wide range of customers, and we can do all the way down to lower credit scores and all the way up to higher credit scores, all at affordable rates and terms. And because of the way we structured the program, we keep the cornerstone of the program, everything that we do is about affordability. So when we looked at it, we make it easy for the operator to bring it in. We make it cash flow friendly to the operator. We do have a pricing restriction on the home, so we keep the price low because we want to keep the home sold at cost. And then we offer the lower rates and terms because on the backside of it, in the event of any kind of repossession or repos, we have it where the operator agrees to purchase the home back. It's pre-negotiated they would buy the home. It's a good win all the way around for everybody because it allows us to offer the lower rates, the better terms. The home stays in the community in the event of a failure, but it lowers the limits of failures because everything's affordable. Lower priced home, not sold at, we're talking about homes sold near cost, not like retailers who will sell them 70, 80% markups on those. So it ends up being a very successful mix. Now, what we've done over the years is we've added features and benefits to the program. We've looked at the customers, the operators, and how they manage their business and tried to help fulfill anything to make up for needs where we can do that. We support marketing features on that. We've got banners. We want to get information in front of the customer because it's hard to find out about financing for manufactured homes, and we want to make that easier for the customer. We also give the operators support in the fact of dedicated MLOs that can walk the customers through the deal. Because one thing about the model for manufactured home parks is you've got a property manager that's managed in the community. One, there's enough just to manage the community, but you turn around and have to be good at sales, have to know the mortgage process, and it's very difficult. So we give you a dedicated person to that. And that's the big game changer when you really look at how we can help that customer through the deal. It gives the customer a chance to be educated about how the process works, and it gives them a comfort level as they go through it so they can understand it, because it is complicated and it is highly regulated. We did add some other features and benefits to the program, and that's the used home financing. So we started out just with new, the spec homes, and then we added used. And then we also, there's going to be situations and times when the customer doesn't have the down payment. Even though we offer very affordable, low down payments, they just don't have the down payment necessary to come up with it. So we offered rental programs to the operators so a customer can come in and do a lease with option to purchase. And then once they've saved up the down payment, they can then be converted to a homeowner, which is what they came in and originally wanted. So it really fits the market very, very well. It's very, very affordable, and it's all built into the transaction. So I think that's a good summary for kind of where we've been, Frank.
Sure. And let me tell people why this is such an exciting program, because here's how it works. If you have a vacant lot, these are your options. For free, you can maybe bring in an RV. RVs are not treated like mobile homes. So what happens is when you bring in an RV can leave at any time. So it's not really favored or even counted by some lenders as even being an income producing object in the mobile home park. Up from that a notch, you can try and go out and bring in a home from somebody else's mobile home park. That's called an organic move-in. But there you're already out about $5,000 in transporting and setup. And additionally, it can sometimes cause obviously a lot of bad will with your neighboring park owner who you pulled the home out of. From there, without this program, if you wanted to fill a lot, you'd have to buy a used home. Let's say you go out and buy a used home, a 1980s home even, that you find in a newspaper for $5,000. It'll cost you another $5,000 to move it. So now you're at $10,000. Then it needs $5,000 to rehab. You're at $15,000. So as you can see, the capital piles up really rapidly when you're trying to fill this out of your own pocket in the absence of this program. So that's what makes it exciting. Now, there's some other wrinkles to the program I also want to discuss with Ryan here. If you have a mobile home in your property that you brought in or you inherited, when you purchase the property, you also have the ability of tapping into 21st Mortgage to finance that. So Ryan, tell people how that works.
You come in and you already have some community-owned homes. That's where you can use the used home program to help those customers. If you have customers that are renting those homes or you want to put those homes up for sale, we offer a program called the used program that will allow the customer to come in, again, with low down payments and affordable rates. One of the things that is very difficult for the lender is giving affordable rates, and having this partnership allows us to come in and give reasonable rates. We've got rates from 6.75 all the way to 9.75 for these customers that are coming in and looking at these homes. So we keep it, again, you keep hearing me say it, affordable, affordable, affordable to the customer, because that's what we're focused on, and that's what will help give success long term, and that's what we're looking for, is long term, not short run success.
And let me give you an idea just on the financial side on this. If you bring in a typical new home from the factory, a lot of people don't realize, so it's probably another part of Mobile Home Insider secrets, is how affordable these homes are produced today. If you go to the Clayton plant, for example, we buy a lot of homes out of the Wakarusa plant up in Elkhart, Indiana. They're producing about 11 floors a day of home, and that by 11 floors, obviously a single wide is 1 floor, but a double wide is 2 floors. And they're producing these homes at a price level where some of them coming off the assembly line, you can purchase in the $20,000-ish range, 24, 25, 28. And you look at what they make for that price, and it's amazing. If you go look at a car manufacturing plant, they build a car today in America, and it comes off the assembly line, and it's priced at $40,000 or $50,000, and it's just a body and an engine, and you can't live in it, and you can drive it around a tad. These are giant objects. Some of these are 76 feet long, 14 to 18 feet wide, complicated things, cabinetry, windows, doors, carpet, flooring, the frame, the roof. Absolutely amazing that they can produce these at that price. So really what you're doing is you're tapping into two things on the new home side. You're tapping into these amazing objects that are big and roomy and look great at incredibly low prices. And then you factor the second leg of that, which is the 21st Mortgage program on the cash program. And it's an incredible win-win for everyone. You're allowing customers who need affordable housing to get something that looks terrific at a really low monthly rate. The typical rate on these, and Ryan can correct me if I'm wrong, typically around $350 a month. Yes. I think it was what most of these run. And if you couple that with our lot rent, I think our U.S. lot rent average is about $280 a month. So you add those two together, and you're producing a fantastic object for under $700 a month, which comes with a yard, 3 bedrooms, 2 baths. That's very powerful. If you can then put that in a manner where the park owner can do that at no out-of-pocket cost, and you can see the power of the program. That's why, in the sake of transparency, we're the largest users of this program, I think, in America. If we're not, we're close. And we do it because we see it as a complete win. It's successful for the folks at 21st. They get to put loans on the books at attractive rates to them. As the park owner, I'm filling lots, which produces value because now I'm taking a vacant lot and making it occupied. And then on top of that, and maybe the biggest winner of all three wins, is the consumer, who gets an object that looks just like new single-family construction or Class A apartment and their own yard at a price point that is far under stick-built or apartment rents. Bear in mind, the stick-built median in the U.S. is about $200,000, and the average apartment rent in the U.S. is running about $1,300 a month. So I'm coming in at about 50% of that with a product that is equally as good or better than those products. So it's a really amazing program for any park owner. And the reason we wanted to have Ryan on here to tell you about the program is just it's so unique and so powerful. That's why when it came out, 5 years ago, I think originally, 2012, we jumped on board with both feet. And the program has gone through different versions, kind of like Microsoft software, the latest version, of course, being the best. But we knew from the beginning it had a lot of promise because of its win-win nature. So, Ryan, tell people who listen to this, if they already have a mobile home park, how do they get the program going, or how does that work exactly?
So when somebody has a mobile home park and they're interested in getting started on the program, it's extremely robust, and it's hard to condense into a very short conversation, but there's so many features that are built into the program that are beneficial. So we have a team dedicated to helping you through that. It's led by Candace Doolin, and she has two people that work with her, Paul McDonald and Heather Byers. And you can call in to our number at 800-955-0021 at extension 2902, and any of them could answer the phone and help you and walk you through the questions that you would have. And we would be glad to do that. We have a website coming soon, and we'll get that URL out to I'm sure it'll be a resource that Frank has available to you guys. That does some good explanation on the program as well. Bottom line is we want you to be really informed about the program and the power of what it can do for your customers and your community. It's just really become so much more streamlined over the years. I mean, you look back at the success we've had on it. It's from the first year, it's 40 times larger than it was from the first year. And it was popular then, and it's gone through several transformations as we learned more and as we've better tried to serve our customers. That's what we try to do. I mean, when you look at the cornerstone of us, it's affordability, and then we look at service for that. I love how you point out about the new homes and the price points on these homes. You know, we constantly analyze it, and it's about every $1,000 is about $10 in the customer's payment. We constantly look at that, and Clayton does a great job of putting out a lot of models and different variations, different spec levels. They've got homes as low as, $18,000 to $20,000, and single wides all the way up to $45,000, $50,000 that meets all the criteria that any community should have. So it's a great fit. We do consultations basically with the operators and help them. We try to share best practices, our knowledge. What Frank does here is amazing, and what he provides for his audience. We do the same kind of thing as far as saying, hey, here's what we've learned, here's what's in that market, here's what's available, and we try to help guide you through it the whole way. And when you're in the program, we're helping you. It doesn't just flow automatically. This takes a driver in that, and we help push that because we know that, you've got a property that's, you're not necessarily there every day. So in some cases, you have somebody that's right on site, but you have a manager run it, and we try to help move that along and try to help share best marketing practices and campaigns that we do to help this fill up and be a successful venture for everybody involved. So if you can reach out to the communities team on that, we'd be glad to help you and glad to walk you through there and answer all your questions. And we can provide you also with some materials that would help you understand it a little better too.
All right. And we want to heartily vouch for the folks at 21st. Again, where I think we're the largest users of the program. We love the program. We also love the products that Clayton produces, although they do through 21st now finance home brands other than Clayton. Clayton product is among the best in the industry. You can happily see that at any show you want to go to or any home you see for sale at any community across America that's got Clayton in it. Just a terrific product, a terrific concept. This completes the fourth part of our mini-series here on Insider Secrets on Mobile Homes. It's Frank Rolfe at Mobile Home Park Mastery Podcast. I want to thank Ryan Howerton for being here from 21st. I know he would love to get your call and talk to you further about the program if you have any interest in it, which you definitely should if you either own a park now or are buying one in the future. So again, this is Frank Rolfe. Thanks for being here. We'll talk to you again soon.
Thank you for listening to the Mobile Home Park Mastery Podcast. Be sure to visit us at mhpmastery.com to subscribe to the show, read our show transcriptions, and access all of our great information on mobile home park investing.